Welcome to Making Money. I'm Matt McCall. Thanks for joining me here today. It is the 3rd of February. We just missed yesterday. I thought yesterday was fascinating. Number 2 is one of my favorite numbers. It was 2-2-22. And of course, 20 days from now, 2-22-22 will be an extra one. But I made my intentions for the year. I wrote them down at 2:22 p.m. of 2-2-22. Let's see if they come true. One of them is for the market to rally into the end of the year. And I think it's going to happen. But coming up right now, we're going to talk about ARK Innovation. I know Cathie Wood gets beat up a lot by a lot of people in the media. I'm going to talk about their big ideas 2022. It just came out recently. I love it. It's like kind of Christmas morning when I look at their new thoughts on innovation going forward. We'll dive into that right now, coming up on Making Money. Again, this is Matt McCall. Thank you so much. It's February 3rd, 2022. Missing that cool day by one day. Again, it's my birthday month, so I like February. Short, sweet, to the point, no BS. That's what I try to do here. Remember, there's 3 things we're trying to achieve in this show, every single episode. We're here to educate you. We're here to have fun. And of course, that equates to making some pretty good darn money, which is the name of the show. And with Matt McCall, which is me. So let's jump into the show here real quick. It is actually late on 2-2-22 because I'm going to be traveling tomorrow. So basically pre-market if you're looking at 2-3. And I want to pull up the S&P 500 because the rally continued in the S&P 500. And as you can see here on the chart, it closed up Wednesday again, up about 0.9% on Wednesday, closing at the best level in about 2 weeks, about a week and a half, almost 2 weeks. Quite the rebound. I mean, look at the rebound in this chart. It broke that 200-day moving average. It held on that support. Boy, oh boy. That support line, I got to tell you, folks, is really important. And I have it on SPYs here. I'll pull it up, the SPY, just to give you an idea. And you can see here, you know, I'm going to actually have to move it down. It's the wrong area. But see how it held that support, that double bottom there? Boom, boom. Man, oh man, that's really bullish. So it's good to see that action, and we'll see if it plays through and if it continues. But you know, during the same time frame yesterday on Wednesday, the Nasdaq Composite actually wasn't down. It was up 71 points, up 0.5%, but it was not as strong as the S&P 500. You can see it closed off the high of the day and it's back to which is now kind of a little short-term resistance level. But what closed down is the ARK Innovation ETF, symbol ARKK. Because some of the companies in there had some poor numbers. PayPal, one of them, got absolutely crushed. I'll talk about that in a second. But ARK Innovation was down. This is some after hours. It was down about 7%, but it's down after hours because Facebook, which is called Meta now, came out with some terrible earnings, and tech stocks are getting crushed after hours on Wednesday, heading into Thursday morning. It's funny because I go on Twitter and read the things and go on to Yahoo Finance and all the different media sites, and I don't turn the TV on very often, if ever. But you know, reading the different people that are on TV. It's fascinating to me that, okay, it's over. That was what they call a dead cat bounce. It means it just bounces for a couple of days and continues. Maybe it was. I don't know, folks. I can't tell the future. I will tell you this, though. When I look at the action that we see right here in the ARK ETF, what we're looking at right now, I still think we are at or near bottom. Do we go straight up? No. But keep in mind, from Friday's low through the high on Tuesday, that's 3 trading days, really, folks, 3 trading days. We were up over 16% in 3 days. You make that for a year in the market, you're crushing the market. So you're not going straight up. You're going to see some profit taking on short-term traders. You're going to see some investors that are just happy to get out now and they want to just head for the hills. And then you have the people who hold them and the ride is up and down. So the fact that we pulled back doesn't surprise me one iota. We can't go straight up. We're up, again, nearly 20% in 3 trading days. That just isn't reality to keep going forever. So keep that in mind. Let's take a look here at, I'm always going to call it Facebook, but it's Meta Platforms. Getting crushed in after hours right now. You can see this is after hours on Wednesday, heading into trading on Thursday morning. They reported numbers that were not as good as expected, but they weren't horrific. And they did guide a little bit lower going forward. But again, not horrific, but down over 20% in after hours. Think about that. 1/5 of its value gone in a day. I mean, who knows? We could bounce back from that, and we'll see where we end up closing the week. But again, it's fascinating what we're seeing. On the flip side, we had, again, I'm always going to call it Google, but now it's called Alphabet. Look at the action that we saw on Wednesday in Alphabet. Intraday hit the new highest level ever up here, new intraday high. Closed a little bit off it. We're pulling back a little bit after hours because of in sympathy with Meta, Facebook. But again, I mean, so you're kind of seeing a tale of two tapes. And let's go to the largest company, publicly traded company here, and this is Apple. And you can see, that, ignore that, it's a bad print. But Apple had moved up and not far from its all-time high, and it's at nearly $3 trillion. So again, it's a tale of kind of two tapes here. It's kind of interesting to see how some of these big names are separating from each other. But it's something that I think we want to keep an eye on. But again, this might be moving into a scenario, and I think this will be true in 2022 and beyond, is, and I hate this term, but more of a stock picker's market. You need to be in the right stocks and the right trends. And Meta long term, their exposure to the metaverse and other areas, I still think it's a great company. I don't catch falling knives, so I'm not trying to buy it when it's down 20% in after hours. Will there be a certain time in the next week or several months? There could be that I take a look at the stock, but I'm not trying to, again, catch a falling knife, because when people are rushing for that exits and people are yelling fire, it could continue for a foreseeable future. So I'm not jumping into it, but I will say it is a stock and a company that I still like. So it is something that I would keep an eye on going forward. So let's talk a little bit now about what I mentioned earlier. And this is the ARK Innovation comes out with what they call their Big Ideas report for the last couple of years. And it's great. You can get it for free. I think it's on ark-invest.com, if I'm not mistaken. You can go there. And they talk about different themes. And a lot of the themes coincide with what I believe the Roaring 2020s will be. I'll just go quickly through their themes, and then we're going to dive into a couple of them. Artificial intelligence, digital consumers, that's what's called e-commerce, digital wallets, kind of like blockchain-ish, public blockchains, Bitcoin, Ethereum and DeFi, so there's a lot there, Web3, those are all kind of connected, so a lot to do with the blockchain, it means a lot. Gene editing, multi-omics, electric vehicles, autonomous ride-hail, autonomous logistics, which is kind of like the e-trucks and logistics, 3D printing and robotics, and then orbital airspace. So some of them they had last year and a couple of years in the past, but some new ones in there. But yeah, I always find this fascinating. I think every investor that invests in growth or innovation should take a look at this. And you may not agree with it all, and I don't agree with it all either. I don't think anybody out there is perfect, but I think there's a lot of great numbers in here to kind of put things into perspective. And sometimes their numbers are a little big, and I don't agree with them. I also think there's some numbers that in some areas that they overlook that I think have great potential. But again, I educate myself 24/7, whether it's walking down the beach with a audiobook in my head, or running down the beach, or walking to my massage this morning with a audiobook, whether it's at the gym, putting it on, whether it's just laying in bed at night listening or reading. Always educate myself. So I'm always up to reading this and looking at it, and I take what I think is a good piece of information, and I think that's something that could help me in my investing and pass that along to you. So it's fascinating. There's really 5 innovation platforms that they really believe in that will generate the significant equity market returns over the long term. The largest one is AI, artificial intelligence. They think that it's going to go from a valuation about 10.5 trillion, and it's going to grow at an annual rate, what they call a CAGR, which is compound annual growth rate of 26%, which is a huge number, 26%. And there's a little tidbit that I learned way back in the day. It might have actually been in college. It's called the Law of 72. And this is always fun for people to know when they're trying to figure out how to double their money. So you take whatever your annual rate is. So let's say you think your 401k is going to get 12% a year. You take 72, you divide it by 12. And what do you get? 6. So that means at that rate, you'll double your money every 6 years. And you say to yourself, Matt, that doesn't add up to 100%, which is right, because that's the power of compounding. It ends up at 70. It doesn't end up there. It ends up at 72. So to keep that in mind, it's always neat to kind of play that out in your mind. So if it's 6, it's going to be 12 years. It's going to be 12 years. That annual raise is 6%. So you can see how quickly that changes. Because if you're getting 6% a year, let's just say you start with 10,000. In 12 years, at 6%, you're going to have 20,000, doubles. You start with 10,000 and you're making 12% a year. In 12 years, it goes from 10 to 20 and then 20 to 40. So you have 40 versus 20, you have exactly double what you would have had. So that 6% a year makes a big difference over time, folks, over just 12 years. So artificial intelligence, they think goes from 10.5 trillion to $108 trillion, which is a huge number for a market valuation for anything. This is by 2030. Battery technology expect to go from 1.5 trillion to 32 trillion. That's 35% CAGR, 35% a year. Blockchain from 1.4 trillion to 49 trillion. That's 43% a year. Robotics from 168 billion to 10 trillion. That's 51% a year. And gene sequencing from 125 billion, 3.6 trillion. That's 40% a year. So even though AI is the biggest, it's the slowest growth, even though it's at 26%, which is insane. And then they took a look at the non-innovation equity capitalization. They pegged it at 94 trillion in 2020. They peg it at 126 trillion in 2030. But the CAGR, the CAGR, the annual growth rate, compound annual growth rate, is only 3%. So think about the difference in these gains. Unbelievable, or potential gains, I should say. So I thought that was pretty fascinating looking at that. But they have a lot of great charts in here. I'm not going to show you any of this stuff, but they have a lot of great charts. They talk about AI innovation, which they think could be about tenfold, up, as I mentioned, close to about 100 trillion in equity market cap by 2030. Within there, they have basically 4 areas they're looking at. The largest being AI itself, artificial intelligence, about 85 trillion. The next is cloud computing at about 10 trillion. Then mobile connected devices. And that's just like everything's connected, especially with media entertainment we have going on. I see that going up to 8 trillion. And then IoT, which is Internet of Things, going up to 4.6 trillion. So that's a lot of money and a lot of growth, and I can't see any of them slowing down. It's just going to continue to expand. When it comes to battery technology, basically breaking into 2 subcategories, and they think that this can get to about 32 trillion, but only 2 trillion in battery technology. I say only 2 trillion, but that's a lot. It's a lot when it comes to battery, because we're seeing the cost come down so much, and we're seeing, I think during the early 2020s, we will see battery life, battery efficiency increase dramatically, like exponentially. But autonomous mobility, they peg at 30 trillion, 32 for the battery technology area. And they talk about battery-powered robots that are going to be moving people and parcels. They could basically take down legacy transportation infrastructure. Tracy, changing the economics of physical movement. Physical movement. They say a taxi service could become the norm, and basically ownership of personal vehicles will be the exception, because you'll have autonomous vehicles come pick you up. You don't need to own anything. So I think that will happen. I don't know if we get to that size by 2030, but hey, I've seen other things happen so fast that nothing surprised me at this time. The robotics, they think they can go to about $10 trillion. In there, robotics itself about 8.6 trillion, 3D printing 1.1 trillion. I just did a special report for my subscribers on 3D printing, recommend a bunch of stocks for a basket. I have a new issue for the McCall report coming out Monday, and it's all about 3D printing and how it's going to change the future. And I just did a interview with Dan Ferris of Stansberry Investor Hour, one of my colleagues, one of the great guys out there, been in the market for a very long time. I love being on a show. I think I was on a show for his 4th time. I think maybe the guest has been on the most right now. And it's funny because we don't always see eye to eye. He's much more value and much more growth, but we just had a great conversation. And I talked to him, I gave him my spiel on 3D printing and why I like it. And he was so happy, he was sold on it. So I think 3D printing go to $1.1 trillion. I think that's calling it short. I think it'd be much bigger. And then reusable rockets, which is part of 3D printing and part of this whole thing, at $500 billion. So this is one I think that could be actually bigger than what they're saying. Genomics is another one. Genomics technology, they can see go to $3 trillion. Gene sequencing 1.6, and then gene editing 1 trillion, and living therapies 1 trillion. I think this could be even bigger, folks. I think this is going to be an absolute game changer when we start seeing some of these CRISPR and other gene editing technologies be approved. As far as prevention of diseases, precision medicine treating diseases a certain way, all based off gene sequencing, gene editing. Boy, I think this could be even bigger, but that's another one of theirs. And then they think that their crypto assets and their digital wallets, as they call it, all part of the blockchain, could be just under $50 trillion. 40 trillion of that being blockchain, 9 trillion being digital wallets, which I'll talk about here in a minute. But it's fascinating how, you know, they believe what I believe when it comes to the convergence, if you will, of all these technologies coming together. And, you know, this really leads to just an amazing decade ahead of us that's going to see innovation that we can't, I think, fathom yet, which is fascinating to me. One of their trends within blockchain just mentioned, so we'll jump right to that, is digital wallets. And when they talk about digital wallets, they talk about, like, you know, Square's Cash App or PayPal's Venmo, okay? So they put a great chart, they put in last year, but they put it again this year as well. The chart that they talk about, they show JP Morgan, you know, JP Morgan Chase, that they it took them 30 years to get 60 million deposit accounts. And a lot of that was due to 5 acquisitions. They, back in early 90s, Chemical Bank and Manufacturers Hanover. They merged again with Chemical Bank and Chase Manhattan Bank. Then there was Chase Manhattan Bank and JP Morgan. Then there was a Bank One acquisition in 2004. Then there was Washington Mutual in 2008. So they accumulated a lot of these accounts by buying and merging with other companies. However, Square's Cash App, they amassed 74 million annual active users in the past 8 years. PayPal's Venmo is at 82 million in 11 years. I just told you JP Morgan took 30 years to get to 60 million. A lot of it's through acquisitions. Fascinating just how quickly the adoption of these digital wallets are coming on. And, you know, that is all about, you know, peer-to-peer stuff. But you're going to start seeing more come into play here, where you're going to see some of the blockchain come into play. You're going to see NFTs come into play. There's going to be a lot more that happens with it. But that's a fascinating sector that a lot of times overlooked. And on Wednesday, PayPal stock got absolutely demolished. Let me pull up the chart here for you real quick. And, you know, I think these companies are great companies long term, but including after hours on Wednesday. And you can see the stock lost 26.5% of its value. That means it lost over a quarter of its value, folks. I just told you how big PayPal is with its Venmo app. Unbelievable. The stock was at $310, at $129 now. I'm going to zoom out a little bit here just to show you the magnitude of this pullback. Went public in 2015, dipped down to around, I don't know if it hit 20s or not, now low 30s. We're up to 300, so it was a 10xer in a matter of 6 years. 6 years at 10x. And now it's giving back, look at this, from 310 to 129. I got to tell you, like, I don't catch falling knives. I don't give stock recommendations on here. I give you my thoughts. Nothing here is a buy or sell recommendation. But I will say, at some point, I feel like this has to just become, I hate to use this word, cheap. Absolutely cheap. So, all right, so we'll talk about that. You know, obviously, they're big on blockchain as well. They think Ethereum's market cap could exceed $20 trillion in the next 10 years. $20 trillion, folks. Think about that. You know, where Ethereum is today versus where they think it can be. And its market cap today is 321 billion. And ARK thinks it hit 20 trillion. So 3 times 20, that's a 60xer, give or take. Whew. Unbelievable. Unfreaking believable. Then there's the Web3 they call it. I call it Web 3.0. You can call it Metaverse, whatever you want to call it. It's all kind of the same. They think by 2030 that we expect Web3 to depress annual offline consumptions by 7.3 trillion, boosting direct online expenditures at an annual rate of 28% from 1.4 trillion today to 12.5 trillion by 2030. Fascinating, fascinating. I mean, these numbers, it's just amazing to me. And these are huge, huge numbers, folks. I mean, trillions and trillions and trillions. It's unfreaking believable. I love reading this stuff because, you know, a lot of stuff that I've talked about, we know about this, but at the same time, man, oh man, there's just so much out there. You can only do so much reading. I think for the average person going through the 100 plus slides, it's very easy to go through it. They talk about electric vehicles, which, you know, I love. They believe that electric vehicle sales will increase by about 8-fold from 2021 to 2026, and that's going from an annual rate of 53% annual rate growth, 53% a year, from 4.8 million electric vehicles sold in 2021 to about 40 million sold in 2026. That's unbelievable. I mean, that's huge. And again, a lot of that battery technology goes along with this. The other thing that's fascinating is next year, and a lot of people are predicting this, but they're one that they believe that the Toyota Camry will have an average price of about $24,000 in 2023. Last year, the average price was $24,000, so basically staying the same for a new Camry. And a 35-mile range EV, electric vehicle, in 2019 had a price tag on average about $50,000. 2 years later, went down to $40,000. They're saying 2 years from there, going down to $24,000, so it's at parity. 2 years from there, 2025, Camry will go up a little bit from $24,000 to $25,000, where the 350-mile EV range EV, then to $16,000. So you can start getting there, and then that's when sales completely take off. And I agree with it. It's just a matter of time when technology comes in. This number always blows my mind because it's tough to fathom. And this is the autonomous ride hailing. They talked about this last year, at least, maybe even before this. But their research, as they say, suggests that autonomous ride hailing platforms are going to add roughly $26 trillion to global GDP and $2 trillion in profits per year by 2030. To give you an idea, it says for perspective, global GDP approached 89 trillion in 2021. And they're talking 26 trillion and 2 trillion in profits by 2030. Think about that. Again, this is upending just how people move. And there's a chart here. You have to look at this when you take a look at it. It's on page 102 when you take a look at it. In 1871, this is the according to their cost per mile of a personally owned vehicle. That takes into cost, everything. $1.70 per mile to personally own a horse and buggy back in 1871, which I think is awesome, but not great. In 1934, 70 cents. 1950, it didn't change, 70 cents. 2016, it didn't change, 70 cents. By 2030, autonomous ride-hailing, 25 cents. Again, the way the world's changing, when I talked to Dan Ferris, my colleague at Stansberry, we talked about autonomous vehicles. I was looking at an A1A here as I was doing it, and he just can't see it. And it's tough sometimes for me to see it, folks. But I will tell you, it's out there. It's going to happen. And when it happens, it's going to catch a lot of people off guard. But I got to tell you, you look back 10, 15 years prior to today, you would never imagine that little thing in your pocket, that little computer phone, iPhone, which is now taping this, would be something you can't live without that everybody has. Fascinating. So, well, anyway, folks, I just wanted to dive into that because I felt like it's something where I wanted to kind of get you excited because I want you to go look at it. And to me, we live in a world where you want to prop up people that you believe in, prop up your competitors. I don't care. It's not about money. It's about there's enough money in this world we could all have, enough money if we work hard and achieve our goals. And for ARK Investment, of all the bashing Cathie Wood takes from CNBC and other garbage networks, I feel bad for them. Bad for her, I should say. But then again, you look at over time, she's been great. So, and she will prove to be smart again in a couple of years when these stocks come back. So, again, but I think if anything, I don't care if you don't buy any of these things, and that's not my job here. My job here is to educate you. Have fun. You'll have fun reading this because you're going to be the smartest guy at the next cocktail party you go to at the local corner bar. And then from there, we'll make money with this information that we educate you with and have fun with. But again, thank you so much for supporting me. I hope you have a wonderful weekend. I'll be back Tuesday. I'm heading out of town, but I'll be back ready to go. Be safe. Have fun. As I used to say back in the day, go give somebody a hug and a smile. Pass along the love, folks. Thank you so much. I'm Matt McCall, and this has been Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.